Good morning, ladies and gentlemen. Apologies for some sniffles, perhaps, as I go ahead, but let me also start by adding my own welcome to you. Thank you for joining us here in the Convention Centre, what I really hope will be an enjoyable and thought-provoking day. I also would just like to acknowledge our sponsors, PwC, our communications partner, Trinity, and our media partner, CNBC, for their ongoing support. We've come a long way. This is the fourth CEO conference. The first one 4 years ago took place against the backdrop when Irish fortunes were in the doldrums. Ireland was in the international headlines for all the wrong reasons. Many commentators questioned the underlying strength of the business model and the capacity of our economic model to survive and to bounce back. Yes, we faced enormous challenges, but fatalism that was voiced by many was not shared by the business community. In fact, part of the rationale for this conference series was to provide a platform to business to directly tell its story and demonstrate the capacity to adjust, to recover, and to drive recovery. Of course, as Brian said at the start, we're not quite there yet, but in the interim years, we've made massive progress. The success of our collective efforts is reflected in the new jobs, the strong inward investment, the record export performance, and now record low government bond yields. This is the true collaboration between business and government to deliver the platform for prosperity. Ireland's exit from the bailout programme heralds a new phase of economic revival. This recovery will gain further momentum in the year ahead, and we expect growth to accelerate to nearly 3% in volume terms in 2014, leading to the creation of a further 50,000 new jobs. Ireland is on the way back, stronger, hopefully wiser, and more competitive than before. Of course, as certain problems fade from the headlines, others emerge to take their place. Today I want to focus on two issues which have already been highlighted by our President, John. These are the issues about tax and investment, the money that's been taken out of the economy and the money that needs to be put back in. First of all, on tax. I want to highlight the very significant obstacle that the current tax system could pose to our recovery. Ireland's tax system is not working for growth at the moment, both in terms of direct and indirect taxes. The tax burden, understandably, had to increase during the recovery phase, but it remains now too high, and it'll have a negative impact on the wider economy if it's not addressed. Yes, business has accepted the need for a major overhaul of the tax system to sort out the public finances, and yes, as I said, it necessitated an increase in the tax take and a broadening of the tax base. But given where we are now in our economic development, it is arguable that it has gone too far. Irish income tax is particularly out of line and acts as a disincentive to work, investment and consumption and job creation at its current levels. At 52%, we now have one of the highest marginal tax rates in the OECD. At 52%, it's well above the average of 36% across the OECD area. Moreover, it kicks in at a low income level. We now run the risk of talented people looking elsewhere for work and, crucially, investment opportunities. One of the great features of this crisis is that while the tragedy of the shedding of labour occurred, a huge capital deepening has gone on in our economy. Increasingly, that capital deepening involves services, and services involve people. We need to ensure we've got the right incentives to capture that people part, which leads to the investments that creates the jobs to create that virtuous circle we hope for. So in the next budget, we will call on the government to reduce income tax rates and change the tax bands. The unfair pensions levy should be dropped as it was promised to be. And excessive excise increases, which have put us way out of line internationally, should be reversed. Such reductions will boost sentiment, support domestic demand, and ultimately feed into higher exchequer returns. This is the win-win virtuous part of the cycle that we now find ourselves in and must catch it. My second point refers to incomes policy. At the same time that tax cuts will present an opportunity to increase disposable income, we've got to do this without undermining the ability of businesses to sustain and create new jobs. Many companies in certain sectors will be in a position to award modest pay increases this year, and this is very good news. However, many companies remain in survival mode, and pay expectations need to reflect this reality. Ireland's cost base remains out of line in certain areas. We have the 10th highest labour costs in the EU, 24% above the EU average. This limits the scope for across-the-board pay rises. The fact that pay pressures have re-emerged is a sign of normality returning to the economy. The challenge now is to manage expectations and protect the hard-won competitive gains of recent years. The focus must remain on sustaining employment and creating new job opportunities. Now is not the time for any centralized wage bargaining or wage directions. Companies are at very different stages, and different flexibility is essential for their survival. But it is important that clear lines of communication exist between business, government, and wider stakeholders, including the trade union movement. Employment issues and industrial disputes, which will inevitably arise, must be addressed effectively and, crucially, in a timely manner. Over the coming months and years, this will involve important conversations on incomes and tax policy and how the two interact. We must be open-minded on the best approach. The very negative aspects of the old social partnership system must not rule out options into the future. In addition to open channels of communication around incomes policy, there needs to be a more sophisticated and systematic interaction between government and the private sector on a whole range of matters. We share many of the same aims, as this session I'm sure will prove that collaboration between government and business is crucial for the greater good. But it's important that we work together timely to seize opportunities and address challenges as they arise. Other countries have put in place a transparent and effective model for engagement between government and the private sector. Ireland needs to do the same. On investment, to finish, I think when it comes to investment, we are currently in danger of storing up very serious problems that will come back to haunt us in the years ahead. During the crisis, 85% of public expenditure reduction, 85% of public expenditure reduction was a result of direct cuts to the public capital investment program. In the last 5 years, Ireland has fallen 17 places to 21st of the EU 27 in terms of government capital spending on infrastructure relative to the size of the economy. We understand the problems we had in accessing the capital markets, but that is no longer a constraint. We need a rethink now. We're simply not investing enough in the future of the country. Historically low interest rates provide a unique opportunity to invest much more ambitiously in the country's future. We're now in a position where the return on investment for many capital projects exceed the cost of borrowing, so that we can now fund the very heavy debt levels by investing. We need to significantly ramp up our infrastructure spend if we were to avoid the mistakes of the past, when major infrastructural gaps became a major constraint on our growth. We must learn from our recent history. But we must learn from the recent history that stretched back the last 2 decades, not just from the crisis, but also from the boom period. We call on the government to commit to a 4% of GDP, which is basically about €6.5 billion in today's terms, be put in place for infrastructure development out to 2020 to confront these long-term economic and demographic challenges. Business also has a lot to offer in terms of capital and expertise. We need to get the private sector more involved through public-private partnerships and tackle blockages in the planning system. It is clear that the international community have huge confidence in Ireland. We're seeing again a huge interest in investment in the economy. This very week, again, we're seeing a huge trail of people interested in co-joining in these capital projects. And I think this is an opportunity that we should not let slip behind. We should reflect on where we've come from, but we now very quickly need to seize the opportunity of the future. We get the process right. Time and again, we'll see that the infrastructure projects vital to our economic future will pay dividends, particularly in the energy, the environment sector. But these, as we know, are being subject to unwarranted delays, which in turn not just damage our reputation, but also damage our growth prospects and the prospects for our job growth. So in conclusion, the question that this conference poses is how do we move from where we are now, emerging from a deep and painful crisis, to a new phase of prosperity? I believe Irish business can provide the answers. Irish firms, many of which are represented here today, are winning new business, driving growth, and putting people back to work. If this continues, the economy can grow at an average of 3 to 4% volume growth over the next 20 years. Ireland can move from being the 35th region of the European Union into the top 10. This can be intensive growth in terms of our capital deepening our educational system, but it also can be extensive growth in more Irish people returning home and new immigrants coming here, that our population continues to extensively grow. This will deliver the jobs, the wealth, the standard of living that we all crave. Now is this time to secure this recovery by putting in place the conditions for the next economic development. And Ibec is happy to lead and facilitate that debate. Next month, Ibec will be launching a new campaign following on from our Driving Ireland's recovery campaign of the last 2.5 years, setting out in more detail the views of the business community on the way forward. Views on tax and on investment, but also on education, regulation, public sector reform, and Ireland's place in the world. The government is rightly ambitious to make Ireland the best small country in the world in which to do business. We're not there yet, but we're making lots of progress. And Ibec and Irish business more generally, working together with government, can make it happen. We should be emboldened by how we have recovered in the last 4 years from the fatalism that nobody thought we would be back. We were back, but we're only here, and we want to get to there. Thank you.